Yo, what's up, everybody? It is Thursday, December 29th. 2 more days left in 2022. Maybe a bad year for a lot of people. For sure, it was not like last year. But look, we march on. We march on, okay? So today we had a good day in the market. Sometime yesterday I said we're going to have a Social Security payment day. These large, as I talk about these large fiscal flow days like Social Security and of course like the tax drains, those are really big. But as far as positive flow, we get those 4 times a month. There's usually a very high correlation to the market. Sometimes it takes a day, which we saw this today. But if you've been paying attention, you see that there is, it's a very tradable, if you're a short-term, trader or investor. I don't encourage that, but if you are short-term and if you want to trade off of these things, the pattern is very recognizable and it's very predictable. You have these inflows, and it's not like everybody gets a Social Security check and they run out to buy the stock market. But again, it's a swimming pool analogy. You're filling up the pool. Some of that flows into the financial markets, and so it's just a predictable phenomenon, and you could take advantage of that. So just like the tax drains are predictable, but they're predictable in a negative way. But you can play that too. One thing that was very interesting that people brought to my attention early today was this humongous record-breaking spike in the put-call ratio yesterday. Levels never seen before. Kind of hard to explain. A buddy of mine who follows these things closely, there's a lot of chatter about this on that blog Zero Hedge about the so-called spot gamma squeeze, whatever that means. I'm not a big options trader. If I do, it's just plain vanilla stuff. But supposedly, and remember, the put-call ratio is just a reflection of the volume of puts and calls traded. All right, it could very well be like if you have a massive put-call ratio, which says that put volume way, way, way above call volume. People could be selling puts. We don't know if they're selling puts, if they're buying puts. It just gives you the volume. So it could actually be, and that's what my friend said, kind of like the experts on this stuff sort of saying that this is a low risk bullish strategy for some reason. Anyway, it was crazy. Here's a picture of it. It's just like some of this stuff, and I don't get dragged off my core analysis because of this technical stuff. I just don't. Because I tend to be more medium to long term, and I just, for me, it's about the swimming pool. Is the economy expanding? Is the economy contracting? If there's a month or a quarter where you have these arcane things going on with positioning, with options against cash positions, against futures, I don't pay attention to that. It just doesn't, it's not something I'm into, and nor do I think it's really very predictable. So that's that. We had that going on. But the good news is today reduced you remember that we had a net drain. I was talking about this yesterday. It was about 80 billion that we had to recover from the tax drain on December 15th. There was like 55 billion left. Now there's 55 billion left after yesterday's Social Security payment. And tomorrow, because we have another one of these situations where there's kind of this calendar quirk where the normal first of the month payments, Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff, that's 100 billion day on the first of the month. The first of the month obviously is January 1st, so that's a holiday, so it's going to all happen tomorrow. So tomorrow we should get about a net 68, 69 billion injection, which, Happy New Year. that means the drain from December 15th is going to be completely replenished. And that should mean, and I feel pretty confident about this, that the market trend going into February 15th should be positive. So, it's looking good. And we still have yet to see the impact of the recent omnibus spending bill, that 1.7 trillion spending bill. That's going to take us, that's the budget going into the end of September 2023. And there's been some good, there was some good spending increases in that. And like I've been saying, Social Security going to get almost a 9% increase in January. We got the fiscal flows. We got the interest income flows. A friend of mine gave me a really cool anecdotal, picture of what's going on. He was talking about, he was looking into some real estate deal with a condo, and he was looking at the homeowners association balance sheet. They had like $750,000 in cash, and they have an annual budget to cover their expenses of $140,000. But because of the interest rate increases, they're going to be earning an additional like $37,000. So that's like paying like a full quarter of their expenses. Free money from the interest. So the point I'm making is that these interest income, people are not, the only ones talking about this is me, all right? Everybody's talking about rates going up. Oh my God, rates going up. But, there's a flip side to every story. Here's a perfect example that this homeowners association, a quarter of their entire annual budget is now going to be paid as a result of interest income. And you can extrapolate that through many, many scenarios in the economy where, like I said, with inflation or deflation, rate hikes, rate cuts, some gain, some lose. You can't just say the income flies out into outer space and nobody gets it. That's not the case. You have to understand that it's a balance sheet. All right? And the only time when you're losing net, you're losing is when either the government's taking it away in taxes, or if that income is flying out into the foreign sector. But even if it's flying out into the foreign sector, if you think of the economy as a global economy, it all circulates there. But okay, that's a discussion we can have. And it's a point I've raised in the past, because now, because of sanctions and because of the war and everything, we see the economy, the global economy, breaking up into trading blocks. And I think that's something in 2023 we're going to be talking a lot more about that. Particularly with respect to oil, what Russia decides to do with pricing, with this cap, with this $60 price cap, with talk now that I'm hearing about accepting gold as payment for energy. That's a very, very interesting scenario. Okay, nobody's really talking about that, but I have a feeling that in 2023 we're going to be talking about that a lot more. So anyway, that's it for today, folks. Enjoy tomorrow, Friday. Should have a good day, and of course, closing up 2022. Almost said 2023. All right, have a good one, everybody. Bye. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one out there in the entire universe who has an applied approach to MMT. I take the concepts and understandings of MMT and I use them to invest and trade in the financial markets. Nobody else does that. It's an insight that nobody else has. It puts the advantage on your side. So take advantage. Bye.